Good afternoon to everybody, and welcome to Colliers Baltics webinar on Baltics commercial real estate market overview, Q4 2021. Let's wait for a little bit more for people to gather. I see that people are joining. I'm already close to 100 participants. So our idea today is to go over all the main commercial real estate property sectors. We'll give you quick overview of what happened last year, what were the significant events in the last quarter, and also some hints how we see what can happen in 2022. And as usual, let's start with investment market overview. So I have to say that investment market clearly surprised us in 2021. We did expect a pretty good year, but we clearly didn't expect it to be as good as it was eventually. So if to say that if this is the crisis where we are living at the moment, then for the investment market, I would like this crisis to continue. But of course, this is just a coincidence, and there are other aspects influencing our investment environment than this unfortunate pandemic situation where we are at the moment. So if to speak about the kind of details, then as you see from the graph presented here, we did reach 1.9 billion euros of total volume last year in the Baltics in investment volume in commercial real estate. This is the all-time record, and also not a record slightly over the previous record, but significantly over the previous record. And also it is worthwhile to notice that also new annual records were achieved in Latvia and Lithuania. In Estonia, in 2015 was a bit better year, but not much better. So in general, it was a very, very good year for all countries in the Baltic region in sense of investment volume. So what has been driving this? It's clear that there is a lot of capital on the market, and this capital is looking for opportunities. And the alternatives also are such that are not giving good options for the people or investors who have the capital. So real estate has become this kind of, you might say, for some probably some sort of safe haven where they see also protection against the perceived inflation. Also a topic that has been discussed a lot. There are different kind of believers who believes in hyper scenario, who believes in more modest scenario. And there are, of course, people that see real estate as a still solid growth potential asset class for a long term. So we have clearly investors who are looking this market much longer term than previously. Also, I have to note that, for example, in Estonia, we had last year a lot of, so to say, new money coming to the market. Many successful M&A deals were concluded last year where Estonian-based companies were sold to larger global companies, and a lot of capital was freed from that. And this capital is now last year and will continue this year also to seek opportunities also in real estate. So we expect, considering the amounts that was, so to say, released from those through those M&A deals, we see that this effect to the market can last maybe even next couple of years. This is, of course, private money, more or less. So we see also a different kind of attitude a little bit in investment cases. But anyways, this is in a way good thing that we have new investors on the market. If to talk about the results of last year, then maybe one very interesting thing that I want to point out is that if we look the top 10 deals of last year, and if you look also top 10 deals of each country, then from each country top 10 deals, approximately 40-45% of the deals were related to retail. So I would say that retail among the total volume was also another kind of surprising factor of last year, because for many retail was this kind of, this is a dead sector for whatever reasons, COVID, e-commerce, whatever, but it is visible that investors do believe still in retail, and they play a very significant role. And we are talking about significant large deals like Alpha in Riga, like Stockholm portfolio, like some, let's say, other larger shopping centers or shopping-related properties in all countries. So I would say that this was surprising. It would be interesting to see if this will continue also in 2022. Let's say, but still, I would say that from general investors' target point of view, logistics is the most sought after product, accompanied with grocery sector and also office. More or less from office point of view, investors are looking as prime as possible, as core as possible. But also, let's say, there are investors that are more opportunistic and are ready to take also some value-add opportunities. But let's say, regarding to that, and also one other smaller in volume, but very significant in activity, is the land market. And land market clearly also boomed last year. It was very, very visible in all countries. But regarding land and also all those, this kind of more opportunistic existing property investment opportunities, we have now a construction price topic that is clearly influencing it and hindering some ideas related to those two sub-segments. And in long run, I see that this construction price growth is a topic that can have even more significant impact on our kind of investment market, as this will, for sure, it will slow down the development of new products. This is exactly what we need in our market, and that this is what has been boosting our market over past couple of years. Good examples, Vilnius office and some, let's say, logistic properties where newly built properties have been exchanging ownership. But this is something, and then something important. And if I look also from global point of view, then also Colliers conducted a global survey, and there also 80% of the investors saw that rising construction price can have this kind of clear impact on development, on turnaround cases, and also in long run availability of modern good properties. So this is something that we have to keep in mind, also looking next couple of years. Because it's more or less same situation as for past couple of years, availability of product is limited. It's clearly, in a way, seller's market, and that has had also impact on yields. There has been quite significant yield pressure, but the compression, I would say that compression has calmed down a little bit, but I would expect some sort of compression also in 22. It depends on the availability of properties, what kind of the properties that are available. For prime properties, there is more significant pressure, I would say. Other properties, it depends also, let's say, on the financing conditions, construction price, as I mentioned, etc., etc. So in that sense, it will be interesting to see what will happen with yields also. So that's more or less the overall kind of picture. If to look, let's say, what were the other kind of significant maybe deals in Baltics besides retail, then maybe to mention, for example, also residential sector. We had one significant large-scale deal, although it's more from let's say investment volume point of view, it will be it's more like a forward deal regarding deal between UIT and then PTA, potential rental apartment development in all Baltic countries. 65 million assumed kind of total volume in that deal. It's a significant deal that shows that this trend is clearly dominant now, or getting more dominant also in Baltic market. In percentage-wise, it's still relatively small, but it's clearly growing, and it's growing on Baltic. So more and more investors are looking this as an alternative for this kind of typical classic segments in commercial real estate. So this is maybe all that I can give you now in a kind of very short time frame. If you have any questions, please drop them to the chat, and you are of course always welcome to drop an email or give me a call. I'm sure that you will find my contacts also at the end of this presentation, and also on our web. And without further ado, I would give now the floor to my lovely colleague Evgenia, who will brief you about the trends and situation on the retail market. Go ahead.
Thank you, Margus. Hello, everyone. I'm very glad to see you all today. And actually, this quarter, we will celebrate the anniversary of the various COVID restrictions in the retail segment. Already 10th quarter in a row, we're living with the various COVID restrictions, and with our colleagues, we have calculated that actually last year in Latvia, the shopping center was able to work only 45% of the old time. So actually, it's less than a half. But nevertheless, the COVID restrictions did not affect the landlord activity in the retail segment, and several shopping centers changed the ownership recently. Those shopping centers are T1 Mall of the Tallinn, also amazing deal of the Stockman, where they change ownership in the Riga and the Tallinn as well. In Estonia is the Mustamäe Center and also the Vimsi. Several objects we changed the ownership also in the Latvia, but about those deals we could announce also in the next our webinar. And it means for us that basically the refurbishment, the expansions, improvements, and the diversification of the tenants will still remain the main agenda of the all shopping centers. And actually, we also may see that the past quarter and the beginning of this year, the shopping centers, for example, like Viru Keskus in Tallinn, already met with new improvements. The Viru have introduced to the market the new catering options and also the healthcare cluster. And also the Spice shopping center in Latvia started to do the interior works in the shopping center. So those trends for the shopping center and for the movements of the all shopping landlords will remain the same also for the upcoming year. But also despite the COVID for Estonia and for Lithuania, the end of the previous year and the agenda for this year in terms of the construction will be quite rich. In Estonia, we could mention that soon we will be able to see already new retail park in the Kurna, which is built near IKEA. And actually recently we also already announced that we're very happy and glad to see already anchor tenant, one of the anchor tenant there. The grocery store Selver will take 6,000 square meters in the Kurna retail park. And also, I hope that we will see also some new brands in the very nearest time. For Lithuania, the previous year and also the plans for this year, it's amazing. We also saw a great opening of the Vilnius outlet, and also one of the shopping center near Vilnius is planning to build in this year. We also saw that the Sinukai announced that there will be an additional Sinukai for 6,000 for the square meter. But the great news that the Acropolis group officially announced that they are starting to work under the second Acropolis in the Vilnius. They will start the project with the residential part, and then they will continue by the second stages by the shopping center and the multifunctional center for the 80,000 square meters. Well, despite the positive news in Estonia and Lithuania, unfortunately, the Latvia is not ready to announce some good news in terms of the construction. And in Latvia, we will be very focused for the renovation of the shopping center. Maybe some of them will be the old retail object, which will be underdeveloped and introduced with a new concept in this year. But it's quite logical that if the lack of the new construction of the shopping center are very linked also with the vacancy rate, and also what we see in terms of all Baltic countries in the Latvia, in the vacancy is the highest one, 6.7%. In Estonia, the vacancy in the shopping center is 4.5%, but it's also mainly affected to the shopping center T1. And as our Lithuanian colleagues told us, there is no problems with the vacancy in Lithuania because our vacancy are 2.8%. Therefore, you may see quite a big pipeline for the upcoming year. And also, basically, it's quite a good argument for the graph, which you may see on the right side of your screen, which is showing the shopping center GLA square meter per one city inhabited. And you may see that basically right now, Vilnius are quite far from Riga and Tallinn. And by additional construction and development, Vilnius will be closer to the other cities like Riga and Tallinn as well. Comparing to the shopping center, in the worst situation are even the street retail, which have impacted, first of all, by the absence of the tourists, and secondly, impacted by the COVID restrictions as well. We see the trend that as soon as tourists will come back to the cities and the COVID restrictions maybe will not take place in our daily life, then the vacancy in the street retail also will fill step by step. In the contrast, we see that the activity of the retail segments switch towards the standalone buildings or big boxes in the retailers, especially right now is booming the grocery segment. Last year, we may see that in Latvia have been opened 17 first Lidl stores, and it's already officially announced that Lidl will continue the expansion in Estonia. They already started to hire the people. So maybe we will see also some news in the upcoming year for Estonia in terms of the Lidl. From another angle of the retail sector, there is still tenants which are opening the stores in the shopping center and in some street retail premises. If we are looking at the profile of those tenants, so first of all, this is the standard brands which have opened in the shopping center, and those are following, like in the Viru kiosks have been opened, the Nike flagship store, or Adidas regional or Pinko store have been opened in Panorama shopping center and the Spitze as well. But actually, in the 2021, we also saw that was a boom of those dark stores, which have opened in Lithuania and in Latvia especially, like Bolt, like Wolf, like Barbora stores, those concepts which are providing delivery services. They basically boomed the market, and this trend will continue to remain the same also for the upcoming year. In terms of the trends of the tenants, we see that tenants are looking for the places with the separate entrances. They would like to be maybe it's not so linked with the shopping centers and with the main hallways. They would like to reflect to the all COVID restrictions, and at the same time, they would like to work. So we see that those trends will remain the same. And actually, today's session about the retail, I would like to finish with a quote of my colleague. In the beginning of the January, we have spoken with our colleague from the EMEA region, and my colleague told me, Evgenia, the January is the best month to make any predictions, but not this one. So I wish to all of us to meet all the challenges in the upcoming year successfully and to beat them, and afterwards make a new predictions. And on this note, I would like to give floor to my colleague Regimantas, who will take a floor and shortly describe about situation in the industrial and logistics sector. Thank you.
Thanks, Evgenia. Thanks. I'm actually looking at you and Margus being so happy about having all the space around you for yourself. I can admit this is not an option for our market, for our office anymore after significant growth of our team here in Colliers, Lithuania recently. So you'll have to stare at me and Sandra during my presentation and afterwards at me doing Sandra's presentation. So guys, I hope you see me. I cannot see myself at the moment on the screen, but I hope it's fine. Q4, while having a similarity of student trying to make up for the the deadline for during the last night, overall was actually a decent quarter. Why? Mostly, of course, due to transaction activity, but also because of the prospect of the future that it showed to us about what's coming afterwards, after that quarter. On the other hand, it did not bring us all the answers that were open, and some of them are still pending. And one of the most important is actually for the speculative developers, which is what is the new rent level? And frankly speaking, actually the question is how much of the increased construction costs can be transferred to the tenant. And if you ask me, I don't believe it will easily leap over 10% of the regular, let's call it this way, regular rent levels, or the rent levels that has been in pre-COVID times or even 12 months ago. Of course, if we're talking about new transactions in larger projects, for some smaller projects in specific locations, it might not be exactly the case. But overall, if it would hit those 10%, I believe that it might impact the demand negatively, and at the end of the day, it might the rent prices might have to go slightly down again. Some other key highlights would also be, again, land. The demand still outpaces the supply. There's shortage of suitable sites for new acquisitions, and basically that is postponing at least some of the projects to some degree. But overall, the number of the transactions, the number of the inquiries shows us that the pipeline is strong and it will continue to come. So I think that's something really encouraging to the majority of the developers and the market overall. Low vacancy environment is going to stick for at least few quarters. That seems to be true, and I'll explain the reasons in a minute. We also see a slightly growing share of build-to-suit or build-to-own projects. And I would also say, at least for the short future, it seems like the capital cities are taking slightly different paths in terms of development. But that will be clear after going through all the numbers. So if you think about the trends, there's one reason contributing to those highlights, and that is actually speculative development. Back in time, a bit due to cracking supply of the materials, due to rising sharp rise in the construction costs. Ongoing constructions has suffered some delays and formed the gap in the deliveries, which was especially modest in the speculative segment. So maybe not that bad in Riga, which was providing one or two speculative projects each quarter. Much worse in Tallinn, and basically none of the speculative projects has been delivered to the market in Vilnius. And as the demand remained active, vacancies continued to contract, basically decreasing during the last quarter, decreasing by 1.3 percentage point in Tallinn, by almost 1% in Riga, 1 percentage point in Riga, and lost all of the 2.9% in Vilnius. So basically at the moment, I'm looking at the projects which are completed, and most of the projects that are under construction in Vilnius market are fully rented. Yet about the completed project, it was most active quarter, with producing 60% of the whole deliveries for the 2021. It was 150,000 square meters overall, which was very similar to the year ago, when there was 120,000 square meters delivered to the market. This time, strong contribution came from Tallinn, and from Vilnius. Actually, it was first deliveries, and this time a couple of rather average size built-on projects. When looking at under construction, the situation is really positive. It was actually gradually building up during the whole year, and reaching 490,000 square meters under construction during at the end of the quarter, which was actually double compared to the last quarter of 2020. Looking at the structure of the under construction pipeline, so 43% of that came from build-to-suit or built-on projects, 26% came from stock offices, and 31% went from speculative development. But if you look city by city, that's where those different paths forming and becoming apparent. So for Vilnius, for Tallinn, it was mostly stock offices and build-to-suit build-ons. For Riga, build-to-suits, build-ons, and speculative developments. And for Vilnius, it was speculative developments and stock offices. Looking at the planning phase, actually the picture is really similar to the one which is under construction at the moment. Also, it was gradually building up throughout the year, reaching 860,000 square meters in planning phase at the end of last quarter, which was actually 65% higher compared to end of 2020, when there was 520,000 square meters in planning phase. So build-to-suits amounts to roughly 40% of the whole planning pipeline. Stock offices 25%, speculative development 35%. Maybe the only difference is that while under construction in Lithuania is mostly driven by speculative and stock office projects, so in the planning phase we see build-to-suit, built-on projects share increasing significantly, and actually in all those 860,000 square meters, 42% of that from all the build-to-suit projects in planning phase in the whole Baltic countries. In Lithuania, 42% of that comes from Lithuania, and we've seen some interesting announcement during last quarter. For example, it was 43,000 square meters of Maxima Logistics Center. It was also 24,000 square meters of Lithuanian do-it-yourself chain Moki Veži, There are some also significant projects outside Vilnius in Kaunas. For example, Raben Logistics announced of their plans to deliver first phase at the end of next year of 30,000 square meter logistics site, and so on. Also, what we see is that it was not that apparent, maybe not that apparent in the last quarter, but basically there should be some interesting large speculative sites introduced into the market. So overall, it seems like the activity is there. So as I mentioned in the beginning, it was a decent quarter. And is the outlook positive? Definitely it is. And to end up my presentation, I would say, is it only sunshine in the industrial and logistics? Of course it is not. So what we are actually facing and what will make some impact into the development of the market is inflation overall, then raising costs, maybe still some raising construction costs, new taxation, especially in Lithuania, and some other minor drivers as well. But from all that we see, what's going on and what's going to happen in the nearest future, the outlook is really positive, and it's I could even say it seems to be strong. So that's it from me. The view is not changing, but the sound is coming from the other corner of the screen. So the floor is yours, Sandra.
Thank you, Regimantas, and thank you all for finding time to listen to our webinar. So offices was definitely also one of our very active segments, and I could say that myself and my colleagues here in Vilnius, in Latvia and Estonia, and I believe all market players were actually very, very busy. Since activity has kind of restarted on active basis in summertime, we just sort of saw the projects being recovered from 2020, and some new have been started in 2021. So I probably not lying when I say that we all worked double hours in this half of the year, and the last quarter was really extremely active in terms of closing deals and in terms of new projects starting as well. So looks like a positive trend, and looks like a lot of work and no time to work with marketing or PR things. But nevertheless, let's go step by step. Looking at the supply, so this year was probably similar to all the markets, that the projects that which have been started in 2020 were being completed and finished. And of course, landlords and developers had a lot of issues with rising construction costs and a lot of management with that. And some projects had incurred the delays because of that, but on overall sentiment, the construction is ongoing on a rather smooth basis, and developers are definitely trying to complete these projects to use the momentum of the active market. And the volumes of construction is also rather impressive, especially looking in 2022 and 2023. However, we will see the shortage of supply, gap of supply, I would say, as the constructions is happening in Tallinn and in Vilnius, in the CBD areas of A-class projects. So in 2022, the selection for tenants of these spaces will be rather limited. However, activity will definitely coming back in this location in 2023 up to 2025, because there is a good pipeline currently under design phases. So another trend that greatly impacted our market and still continues to impact is hybrid working models. So we see it the tenants are doing some remodeling of existing office space. This is especially notable in Riga market. In Vilnius market and Tallinn, I would say probably not so much this trend would apply to existing office space because actually a lot of offices that were done, I don't know, going back 5 years was already reflecting a lot of modern and innovative work approaches, activity-based offices, areas with quite substantial space dedicated for collaborations, and generally office buildings were quite high quality. However, if a company is doing the relocation, there is some changes already foreseen in the layouts to adopt even more to the hybrid working models. Especially we've seen a lot of audio and video equipment installations in existing offices. Then what else comes from the office space remodeling and hybrid workspace is that some of the companies are reducing the required area sizes by switching dedicated work stations into activity-based and allocating more space for meeting rooms and collaboration zones. However, we wouldn't say that that this is done purely to save costs because the new office that the companies are looking for is usually in the better locations and better quality buildings and better offices itself. So whatever is saved on the square meters is kind of spent on the quality increase. And this is also coming to the point that the demand for high quality space is high as never before. Working with the tenants, like previously, I would never hear such a question from 100 square meters tenant, does this building and this office will have a humidification system? So, of course, companies are very much kind of forced to rethink their office solutions because the war for talent and employees attrition rate this year was so high, and they have to basically compete in attracting new talent. And for like there has been countless interviews during the year with employees. How is work from home? Are they happy? Are they still happy? Were there any signs of the burnout? And it seems that some people are still very strongly prioritize this work from home as it saves time commuting. It provides more efficient working environment because there is less distractions in the office. So basically, if the company and the management wants to bring back employees to the office, they really have to think about office location, that it would be convenient to all employees. They really have to think about quality acoustic solutions, quality, how to say, air conditioning systems. Also, what we see for coming in 2022, that the tenants will look at the sustainability in very, very practical terms, I would say. If before this was a nice to have feature or of course culturally accepted feature to be more environmentally friendly, in this year we see that energy construction prices will rise, rent inflation will be quite high. So the tenants will start calculating that in their balance sheets, and energy efficient, sustainable buildings will definitely gain more, how to say, it will become more attractive for tenants' choice. So in 2022, we also see that the demand will continue from finance, IT, GBS centers, professional services, startups, and also probably notable change will be in all markets that local companies will increase their share in the take-up, as they at the moment are quite under pressure in attracting talent. And we already seen this year that even cost-cautious companies have decided to invest more into offices and move towards more developed parts of the cities in all countries. So I think we can start here with my review of the office market, and I would like to invite everyone to the second part of the event, panel discussion, with our guests today, which I'm very honored to have. Audronė Kuprionytė, Head of Baltic Real Estate at SEB, and Pavel Sokolova, CEO at Kevin. So probably those who follow market knows that in this quarter, these companies have completed the biggest market deals in office segment. SEB has signed new headquarters in Riga, and Kevin have signed new headquarters in Vilnius in Artery Business Center. So welcome to the discussion, and thanks for finding time to join us. Hello, Pavel.
Well,
So, Pavel, what is happening and what is the situation today at Kevin? How many employees, what percentage of employees are working from the office, and are you encouraging people to come back?
Yeah, so we are growing pretty fast, and now we have about 140 employees in 8 countries, but the biggest part of the employees is in Vilnius, in Lithuania. It's about 85 maybe here, and now we have office space for 60 places. So for now I can say that about 70% of employees working from office, but it doesn't mean that they'll stick to the office for the whole week. So it's for us, it's important to offer for them dedicated table at the office or place or cabinet. So basically, when we was asking our employees what is the best solution for them, so yeah, they are prefer to work whatever they want, but at like 90% of the employees has answered that they want own table in the office to come, I don't know, for 1, 2 days, 3 days, it doesn't matter. So today, competition in IT sector, in like from the hiring perspective and from top to hire top talents, it's very, very big. And we decide to offer much more than our companies. So, like for example, some of them are offering rotating places, and so, but like employers doesn't like rotated places or something. They want to have own table. So now we are like 80% of our 70-80% of our employees working from office, or they have dedicated table. And the same, we are planning that next year we will have about 300 employees. So, and our planning and decision to sign such big contract for 2023, it was based on that. So 300 employees, about 4,000 square meters, and where we dedicate about, I know, 600 to 700 square meters for the like leisure activities, for networking or so on.
Okay, so sounds good. So What expectations were raised by your management in terms of like new office? What problems or maybe like, I don't know, motivational parts it should solve for your employees?
So, like, one of the biggest thing that we are solving with such office, it's we need to offer for our employees something more that they have on the market. So we are like using this office like an advantage when we are hiring new talents. So we are using that like a branding. We are not like thinking from the perspective that office is the place to work. So we're also using that to hire better talent that we can offer for them better place to work. So
that sounds good. Have you thought of like any specific solutions for your new office? I mean, have you already started planning the new office in terms of layout and design?
Yeah, we start thinking what we want to have there. So like from the like coffee machine, it's not the thing that you need to have, but we are thinking about things like barber shop, like for example what?
Inside the office, barber shop, yeah.
Yeah. Place for the barber, that barber can came to our office and work from the office for only for our employees. So we are thinking about massage cabinets for the employees because they are sitting for whole day. So we want to to make nice place to be, not only to work, but even to be, because the IT talents they doesn't, in our office, nobody has their working hour. So they work whatever they want. So if they want to come to the office like for the, I don't know, for the cool place, yeah, we build it. Cool place where employees can come and spend time not only for work.
Okay, good. Well, sounds actually this is something new I heard today. So sounds good. You also have another 8 office locations in different countries. Do you see any kind of differences between, of course, hiring and between employees' expectations towards the office? What is happening in Vilnius, for example, and in Baltic countries, and maybe in other countries that you have offices?
Yeah, so from the start, when we raised the like our first office was in Quadrum in Vilnius, and the second one now in Green Hall. So the places are very nice, and we raised these standards very high. And now when we are opening new offices, like we are expanding to much bigger office in Warsaw. So we are like trying to find at least the same level of our standards. So yeah, it's pretty hard because these offices, it's not too big, and we are starting from 10 to 15 employees. Like for example, in Warsaw, we have now about 15 employees. So we are looking for the bigger, but we don't have like such possibilities to sign 3,000 or 2,000 and make everything that we want. So we need to find the place that it's pretty same on our standards that we have in Lithuania, but it's already, like, for example, we are considering some spaces like WeWork or another co-working spaces that have high standards for the employees.
Well, sounds good. And probably final question for you, Pavel, today, unless the audience will have something. Was it difficult to find office space in Vilnius?
Like, it's, yeah, because we was talking about a year before we get the office where we are now. So if you are looking for the, I don't know, 20, 25 places, it's okay. But when you start looking for 300, you need to like look to the new buildings. And it was like only 2 buildings that good for us, for our standards. And these two buildings was competing for this contract. So it's not like this that you have, I don't know, 10 proposals for 3 or 4,000 square meters. So you have only 2 for whole Vilnius.
Yeah. I suppose also that why companies are also now willing to wait a little bit till the office becomes available. Good, thank you very much, Pavel, and maybe we can come back to Audrona now, and I will start with the same question. What is the situation now at the SAB? How many employees are attending offices? Are you encouraging people to come back?
Well, hi to all. To start with this question, it's very dependent on the situation in each country, and we are looking at the legislations, what is happening in that country, so very different situations in total. For now, if we are talking about the Baltic states, so we have quite clear recommendations, and we see the growing numbers, so we are not forcing and not recommending to people to come to the office. On the contrary, we're saying that it's depending on you, how you feel. If you feel more safe at home, so please stay at home. And there is a part of the critical functions that we are asking to enter the office, but mainly we do not have some kind of legislations right now. How much of the people to recommend to attend office in total. And as we are quite traditional and we are bank, so of course we're having activities that some part of our employees we need to come to the work. We all know that it's a bit different situation in the branches and a bit different situation when we are talking about the retail premises, the front people who are working with the customers and so on and so forth. So right now, the percentage is quite low. In each of the country, it's different, but I would say that if we are talking about the back office, it's about 30–40% of the people working in the office.
Okay, but in general, let's probably assume the scenario where everything is okay and people are the COVID numbers aren't high and people are kind of good to come back to the office. Would your organization encourage them to come back, or you adopt rather a flexible approach?
So hopefully the situation will end soon. We're still hoping for a few of the years. And still hoping, but if we're looking from the hybrid work perspective, so our organization already implemented that there is possibilities to work from a home or from other location if you're willing to. Nevertheless, as organization, we see the benefits of the office and creating the community and adding value to our employees while meeting and having the informal chats, creating connections, relations, and so on and so forth. So we are making this kind of opportunity, but then as a real estate and as an organization, we're having a challenge. What is the reason to come to the office? And maybe we are transferring a bit of our point of view from the you need to come to the office, but that you would want to come to the office. So it's a bit of related to what Pavel also said, working about the amenities, working about the reasons to come to the office, like events and different spaces, different abilities to feel welcome into the office.
Yeah. We meet a lot of companies living this vision too. Well, actually, your company has been one of most active occupiers in the last 3 years in Baltics, and last 3 years was actually how to say, quite challenging for the office market and quite challenging in terms of taking the decisions. But we've seen that you sort of didn't stop and didn't put the projects on hold and proceeded. So what inspired to actually take this approach?
Mhm. Well, in total, I think that we are believers in offices. There was different cycles in total in the history, how people are working from offices, from homes, and so on and so forth. And the offices in total in history are quite a new thing, looking from that perspective. But we still see the value of that. And we think that human interaction and the need of belonging of a community will still appear. So that means that we will need to create the second home for our employees, and there will be still some attendance in that perspective. Of course, we worked a lot with our employees, with the surveys, with the approaches, how they see the situation, and how they are willing to work from office, from a home, and so on. And we still see that the offices, there is a need of that. So that's why we were quite daring to take the opportunities and to start making the projects of the future.
Good. So also related to that, the question, as you had to open in like quite pandemic times, and there was not like probably not so many employees as you would like that return to the offices. Did you manage to collect any data on user experience, or I don't know, did you manage to make observations that will kind of will have changes in the new offices in Riga?
Mm-hmm. So from our experience from the very beginning in Vilnius, the projects that we already developed, it was planned as activity-based offices with exactly aims what right now are on the target list. So it's creating community collaboration and additional amenities. And we already knew before pandemic that the office is not about your work table, but it's a bit of more what you can have in your workplace. So the pandemic in that sense helped us in that way that it was quite broad and said that yes, the office is it's more than a work table. But on the other hand, of course, there is some challenges for us to have a normal approach in the offices. Nevertheless, while doing the Riga office, we already had the experience with Lithuanian offices, and we made, of course, pre-project surveys, post-project surveys, and we already had the understanding that the new project and the new approach that is implemented exactly according to our employees' needs, not how we see the office as a real estate, IT, or security, but how the employee sees it and how they use it, are the right thing to do. I can remember or remind the numbers what we had. So before the project, the satisfaction of the workplace, TCB, Lithuania local bank was about 54% of employees were satisfied with the workplace. After we made the project and we made the project survey after that, so the satisfaction grew up to 92%. So the change was quite impressive, and that was a clear indication for us that there is no way of stopping. It's about people in that sense, and it always was about the people. We just need to adjust our situation according the surroundings, according what is happening in the world, and we need to move forward with positive news to employees.
Well, this is a really impressive result of employee satisfaction. As 92% is something I didn't hear before. So well done on achieving that. And probably one of the last questions is about the sustainability. So SEB is quite big, and I understand it's quite well incorporated in your culture. And what does it mean for the offices?
So I think that to start with, usually we understand sustainability as energy efficiency, and it is far more than that. So we can talk about the BREEAM Outstanding and to be the first building in the Baltics to achieve that. But I would like to touch another subject, that it's also the well-being of employees, what kind of atmosphere we are creating, and what kind of things we are bringing back to the society. So it adds up a bit more than energy efficiency. While looking at the buildings, usually we are talking about CO2, and that's it. So sustainability in that part is, I think, a quite broader subject, and we are quite eager to work with all the information and all the flows from different directions. So while planning the premises, first of a target is how comfortable there will be feeling of employees. Then, of course, how our customers will be there, and what kind of bring it back to society we are making. And of course, the technical part of sustainability, energy efficiency, is like a hygiene norm for us. You just must think.
Do you have or did you observe any feedback from the office employees? How do they value the sustainability approach?
I think that we are doing a lot of participation in all the sustainability activities. So regarding the office, we haven't measured the exact office sustainability targets in that direction. But of course, for us, it was quite an achievement to be a more sustainable building in the Baltics, as for now, from that perspective. And we know that our employees are evaluating the paddle court, the gym, and the ability to come to the work with a scooter, with a bike, and so on, and to have the ability to have a showers, changing rooms, and move around nearby. So that was quite high numbers of evaluation. So if I remember it right, so this well-being sector was evaluated 4.7 score out of a 5.
Sounds good. Sounds good. It seems like your project in Vilnius was a success, and we wish that it will go into the same direction in Riga. And thank you very much for answering our questions today. I don't see any questions from the audience to the panel participants. So then I will thank everyone for joining this webinar. In case you do have questions, or please free to contact each of us directly, and we'll be more than happy to answer them. Also, this webinar recording will be available on our Facebook page, so you can share that with your colleagues who missed it and couldn't join today. So thanks and goodbye. We'll see you next.
Thank you.
Thank you.
Thank you.
Bye.
Bye.